Hi guys, this is Teacher Party. Welcome to my YouTube channel. Like, subscribe, share, download videos, and do anything that will help you pass. So I've just posted a video on theory and concepts for with regards to the cash budget. So now I just want us to do a practical example for the cash budget. Okay, so I'd like us to do the New Era example. So I recommend the textbook, the New Era textbook. I recommend it, guys. Please buy it at any grade. They've got textbooks from grade 8 till 12. Guys, please buy these textbooks, especially the exercise book and the learner book from New Era. They are very, very helpful. They've got comprehensive examples to develop uh, stamina in each topic that you will study in accounting. So the rigorous activities, they just develop massive stamina for problem solving. Yeah, that's the word I was looking for problem solving and analytical skills, which is highly needed in the IEB curriculum and also in the NSC curriculum. So guys, now let's read it. This is TEPCO Limited. It's a cash budget. Use the following information to prepare cash budget for TEPCO Limited for 3 months, starting from July till September. So that's July, August, September. Now they give you the actual sales, they give you the projected sales. And now remember what I said, what I shared in the previous video, that the cash budget is your cash flow, but a futuristic cash flow, not the one based on historic events, the one based on the one that is projecting future events. Of course, using some historic information to project the future, but the cash budget is future projections. The cash flow is historic cash movements. It's historic. It's what has been done by cash. The cash budget, it's what needs to be done by cash. So the two are related, but they report in different seasons. Okay, but the content is the same. So you're gonna record only cash projections. Okay. Total receipts. Payments. Okay. So you have your receipts and your payments. Obviously, it's your cash receipts and your cash payments. So let's start with the income projection. It's cash sales. They're saying they've given you the actual sales for 3 months and the projected sales for 3 months. They're saying 25% of all sales will be cash. So now we need to start solving for X. Calculations. I'm opening the wrong thing. Yeah. So we are calculating the cash sales. Oh yeah, this is Netlify. You can't download. Okay. Let's do this. Let's sync. So for July 2008, X equals to 180 times 25% equals to 45. Forecast 7, 8. It's 204. Sorry about the noise in the background, guys. Eight. Sorry. One. And now we need to do the data collection. So now then they're saying 25 of all sales will be for cash. And collection in the first month, the same month of sale, 1 month, second month. So now we need to work out the credit sales. Okay. So in the first month of the sale, there's also snip actual sales. Okay, so May. We can start with April, yeah? Let's do this. Let's start with April. June. We're still gonna fix this, guys, the calculations. Okay. April. So they're saying 25% is cash, so meaning 75%, that is 100 minus 25% is credit. So 160 times 75%. Okay, so 75 degrees, it's 120 degrees Celsius. 150. And just 12, 500. And 70. And 27, 500. And 35. Let's do this, guys. But you have to be quick in the exam. I'm just being slow so that you don't get lost. Now, let's go to the terms. The term says they collect 25% in the same month of the sale. No, 20% in the same month of the sale, but sorry about that. 70% next month, 8% the month after that. But they can't collect their write-off. Now, April, they will collect so that we don't go up and down. Let me just snip this again. That is the policy. Can I just put it here? So that I don't have to go back and forth. Yeah. So they're saying the collection is in the month of sale. So April was collected in 20% was collected in April, 70% was collected in May, 8% was collected in June. But they want us to do the cash budget for the 3 months, which is July, August, September. So we can't record April anywhere because it's outside the reporting period. So May, 20% was collected in May. It's not affecting July. 70% was collected in June. It's not affecting July. 8% was collected in July. So we'll say times 8%. Awesome. Then June, 20 was collected in June. 75 was collected. No, 70 was collected in July. So 127 times. Okay. Then second month of the sale. Okay. July, 20%. It was from here. July, collection in the same month of sale. Okay, the month following that. Then the last month. Okay. So now you know how, guys, a data schedule is done. This is interesting. In the IEB, they'll try, also in the LSC, they'll not make it as simple as this for you. Remember, grade 10, 11, you would have done the basics. Grade 12, now they're just putting in the maths in it. So I'd like to drop it down even to grade 10, where we're putting the maths in it. In the integration with mathematics, where you're solving for X. Okay. So let's read what's the other receivable. The markup cost is 50%. So that's for your cost of sales calculation. It is business policy to maintain the fixed asset. 10% of stock is put on cash. Payments to creditors subject to 5%. Cash operating expenses, dividends. The amount settled, there'll be a sale of shares in September, and the expected issue price is 520 cents. That means it's 5.20. Share issue X equals to 20,000 ordinary shares. Okay. You see the months? Yeah. This they're saying the share issue is gonna happen in September. So 20,000 times this total for now. Okay. So now we need to calculate purchases. Cash purchases. 10% of the stock is bought cash. Okay. So first of all, we need to work out purchases. Please watch the video that talks about perpetual inventory system and periodic inventory system. This will make sense. So opening stock, you know that the cost of sales calculation is opening plus purchases minus purchases returns Opening stock plus purchases. Sorry guys, I don't know what my neighbor is excited about. Opening stock plus purchases minus purchase returns. Import duties plus transport costs destinations destinations just giving you a comprehensive guide. Less closing inventories. Oh, okay. Okay. It's business policy to maintain a fixed stock base of 160. So meaning the opening stock, which would have been the closing stock for May, is 160. And they have to ensure closing stock is they have to ensure that the closing stock is 160. Because they say they maintain a fixed level of inventory. They say they maintain a fixed level of inventory. Guys, I'm not making this up. This is what they said here. It is business policy to maintain a fixed stock base of 160. So the stock they open with is 160. The stock they close with, it must be 160. Okay. We're trying to work out our purchases. Did they return any inventory here? No, they did not. So there are no purchase returns. There are no import duties for inventory. There are no transport charges for inventory. There are no damages. I was just making this so comprehensive that if they put inventory, you do not, if they put input duties or damages, you do not exclude them because you did not do that in class. So now we need to calculate purchases. Ooh, X, 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 X. Yamazu X. X, X, X. Okay. Now, they've given you a clue. You know? The markup percentage is 50% on cost. You know? So we need to work backwards. You should have done this in grade 12 to calculate the cost price. Maybe let me calculate it here so that here for you. Cost of sales for July. X equals to, what's the sales? 180. The sales. Times 100. Divide by 150. We're working out the cost of sales. Remember, guys, you should have done this in grade 9 and 12. So it's 120. The sales figure, the cost of sales figure here. August. $204. And 36. So 136. I made a mistake. I recorded this in June. And 108. Okay. So guys, 160 minus 160 gives you 0. So I should not even be here because we are doing this way. Or I was trying to, sorry, what about that guy? Ignore what I said. I was just trying to show the 160 would overlap. It's fine. So we'll start calculating here because I'm reporting for this period. Okay. 160 minus 160 is 0. So, meaning the cost of sales, that 120 there is pure purchases. I want to even do it in a way maybe that will be more clear to you. Purchases for July. Okay. X equals to 60 and 60 plus 120. So this is how we got the 120 here. Purchases for August. Okay. Okay. So these are the total purchases. Okay. Now, from the total purchases, we need to, let's just put total. We need to calculate cash purchases. Okay. So cash purchases is 10% is bought cash. So these are the cash basis purchases because the inventory, 25, 10% of it. Yeah. 10% of the stock is bought cash, the rest is on credit. Then we will write time, which is okay. So supplier purchase payments, they said 10%, the rest is credit. So which is 90%. But then 90% slash payment to creditors. But that 90% is subject, sorry guys, to 5% discount. Is the calculation to you? Always show calculation guys. It's called method maths. IAB is very big on method maths. So supplier payments to creditor. Okay. Supplier purchase payments. Cash payments. So okay. Awesome. Do this. So they are paid, the suppliers are paid a month following the purchase. So cost of sales for June. We need to calculate that because June would have been paid the 95 the 95% that was being owed would have been paid in July for June. And 70. 113.33. Okay. So now June would have been paid in July, né? And it will be 113,333, né? Which is the total sales. Multiply by 90%, which is the total, no, the 113, it's total purchases. Multiply by the 90%, which is the credit purchases. Multiply by 95%. The 90%, remember total sales is 100. 10% is cash, 90 is credit. Okay, so that 90 now represents another 100 because there's a discount taken out of it. So once you get the 90%, then you multiply that with 95% because we've given away discount and it's not cash. We do the same thing. And 36. Okay. Cash operating expenses will be 50,000 in July. It will increase by 2% every month. So cash operating expenses so it's 50,000 July minus 50,000 multiplied by 11.02 is this multiplied by 1.02 because it increases perpetually by 2%. Okay. Final dividend in respect to be paid in July. Will be paid in July. So nil here, nil here. Dividends. The amount owed to SARS payment will be paid in July, 16,000. Okay. We've done the sale of ordinary shares, loan repayment. Will be paid in August. The business had a favorable bank balance, and so that means a positive bank balance. Okay. Do you leave anything? Anything at all? Cash movement. Okay. So let's see, guys, if we did the right thing. I'm just going to look at my teacher's guide. So I have to be very slow with this one because it's mainly calculations. Okay. And now we are wrong. Oh, we forgot to put a negative. We put a negative sign twice. Sorry. That's the problem. Hey guys. Yay, we're balancing. Like, subscribe, share, do everything. Bye.